The Central Bank of Nigeria has issued a new directive mandating banks to submit a capital restoration plan by mid-2025. Now, this is part of the broader strategy to exit the regulatory forbearance regime, a temporary relief structure that had allowed banks to operate with relaxed rules during tough economic times. In a circular signed by the CBN's Director of Bank Supervision, Dr. Olubukola Akinwumi, published on its website this Monday, the Apex Bank said the capital restoration plan would complement its other measures, which includes termination of forbearance exposure and single obligor limits waivers, suspension of payments of dividends, bonuses, and investments in foreign subsidiaries for affected banks. Now, the CBN says the plan should detail the management's proposed strategies to restore full regulatory compliance, including but not limited to cost optimization initiatives, risk asset reductions, significant risk transfers, and necessary business model adaptations. Well, away from that, in another development, and also very important one, mixed reactions have trailed the threat by U.S. President Donald Trump to impose an additional 10% tariffs on Nigeria for aligning with the BRICS. Well, economic experts have called for caution, urging Nigeria to handle the threat diplomatically to avoid any disruption in its trade activities with the United States and members of BRICS. President Trump's announcement, which did not elaborate on any specific policy of BRICS, emerged as the group's meeting was rounding up in Rio de Janeiro, Brazil, with President Bola Tinubu participating. My guest is Mr. Adetilewa Adebajo. He's the CEO of the CFG Advisory. He's live in the studio. Good afternoon, sir. Thank you so much for being here.
Good afternoon. How are you?
I'm very well. I think it's good to start with you making us understand better the restoration plan, what it means. I know the word restoration shows that something coming back to place. Yes. But really, take us through that in the banking space. What does it mean for the banking sector? Does it mean we've not been doing things right, or what really happened before now?
Not really. I think what we must understand is that banking operates not only at a regional level, but also at a global level. And from time to time, there's a review of banking standards and practices, which has to do with capital adequacy and capital ratios. Right now, I think globally, we're moving to Basel 3.4, and part of the Basel 3.4 procurements now are to do with risk-adjusted and capital ratio issues, weighted risk adjustments and capital ratio issues, which is what the ongoing program is all about. And invariably, that will lead to additional capital. So I think we have to understand that in the banking system in Nigeria, there is an organized recapitalization program that is in place, as you're aware. Some banks have already gone to the markets on their first stage and have met all their first stage capital raising requirements. Each bank is adopting its own unique strategy, and this is an ongoing process. But I think the circular now is just coming to talk about the fact that, the central bank, looking at my notes here, that the central bank is taking a different step in terms of moving the process along. As you know, during COVID, there was a lot of forbearance, not only in Nigeria, but globally, within the banking systems to be able to help banks cushion the effect of that very unique phenomenon. And one of the biggest items was on the issue of the single obligor limits. So banks are supposed to be able to lend to companies based upon their capital. They can't give more than X amount of money to a particular company based upon the size of their capital. So some banks have exceeded that, and right now what the central bank is saying is that everybody, because COVID is over now, and we're cleaning up the books and we're going through a recapitalization process. So as part of this recapitalization, we're moving things back to normal. So they've announced that there's the forbearance on single obligor limits is no longer existing, and banks have to regularize that going forward. The other thing they're looking at is the temporary lifting of the additional tier capital recognition limits. So basically, banks now have, in terms of their capital adequacy ratios, so they have another 1 year between June 20th and March 31st, 2026, up until next year, for them to normalize the capital adequacy ratio recognitions in terms of additional Tier 1 capital. So that's also a positive, a move in the positive direction. And, you know, again, they're talking about restrictions during the transaction limits, which is, we've talked about a lot, not paying bonuses, not paying dividends. That's quite clear. And of course, there's enhanced regulatory disclosure requirements in terms of, you know, disclosing the banking supervision and the banking examination. So I think this is a process that is in place. There's no cause for panic. There's no cause for alarm. And it's just a process that will, you know, end when the banks complete their recapitalization plan. So the plan is really is further. By the time the banks have concluded their capital raising exercises, all these issues, all these legacy issues within the system should have disappeared.
So you're saying there's no cause for alarm. I agree with you. But for a Nigerian on the street who want to understand, does it affect the health of the bank in any way? That's number one, stability and the health of the bank. And also, what does it really mean with regards to improved confidence and access to credit?
Well, let us take a look at the statement itself. So basically, they said this is in continuation, is a commitment to safeguarding the financial system stability and ensuring a credible and orderly exit from regulatory forbearance. So this exercise will definitely strengthen the system, and I think we understand that banks are raising more capital, and I've said eventually banks have to continuously raise capital. You remember when we started with the 25 billion. So now we're a long way off the 25 billion. Banks have more than 25 billion now, and so it's a continuous process. And I think this will only help to strengthen the banking system. Now, the other question you raised about improved credit availability, that's a different story entirely. So, you know, the biggest problem is that Nigerians complain that banks don't lend. But you know that because of inflation, this is a tight system, and there's 50% CRR. So for every 100 Naira deposits in the system, 50% is isolated with the banks at CRR. But, you know, so banks don't have access to all their funds. But even having said so, they're still declaring record profits. So, you know, that's an irony, isn't it?
It is. So because that's something that, and if you look at the rates, the NPR rates at the moment, they will even tell you that for the real sector, they'll tell you, how do we borrow at above 27.5%, which is the NPR rate? So what sort of business climate are we building the environment? Because it's...
well, you see, again, like we've said, if you understand, these are all temporary. This is a temporary situation, which has resulted in economic stability for now, because the key problem we have is inflation. So if inflation is high, then you cannot grow the economy, you cannot sustain the economy. So the challenge for the managers of the economy is that they need to go to the 2013-2014 period in Nigeria, when inflation was about 12% and interest rates were about 11%, and the economy was growing in excess of 10% per annum. So we've achieved that level of growth. It's just that we've not been able to sustain it over the years. So ideally, I think if we bring inflation down, then we can restore value, and then we can begin to see significant economic growth. But right now, with the way inflation is, we're having challenges. So I think half year in Nigeria, we can say that we have achieved economic stability. So now the challenge for the government is that how do you now grow the economy in a sustainable manner in excess of 10%? Because the 4% growth or the 3.5% growth we're experiencing cannot sustain the population of Nigeria of 200 million people. You know, so in order to lift people out of poverty, then the challenge now is to put in the right policies to grow the economy in excess of 10%, as we saw in between 2013 and 2015.
Well, I would like you to stay on that, because we saw the report from IMF last week. I'm sure you saw it too, talking about addressing the vulnerable ones after the reforms. Now you've talked about policies that could address all of that. Specifics now, because I think it's time to begin to take these actions. For the business environment, they are commending government But for the other side, the man on the street will tell you, I'm yet to feel the impact of these policy changes. Where do we start from to impact those on the street?
Well, that's for the policymakers to decide and articulate their policies clearly to us. Because as you know, what we're seeing now is that, I guess, as I've said earlier, we've achieved that stability.
Okay.
So now that you've achieved the stability, you now need to build on that stability and bring out your policies for growth.
Okay.
So now, where is your trade policy in light of the Trump tariffs? Where is your investment policy? Where is your industrial policy? For instance, you are importing $25 to $26 billion worth of goods and services from China. So I think we need to be deliberate in the sense that we need to have a bilateral with the Chinese government and say to them that what are these goods that are coming to Nigeria from China worth 25 billion? And who are these manufacturers of these goods? Where are the Nigerian investors and businessmen that can partner with these Chinese companies to come and set up the manufacturing plants in Nigeria to be able to increase our industrial productivity in a lot of all these sectors that we're importing significantly from China? So China is our largest trading partner now, and these are the sort of deliberate strategies you need to have to put in place to grow your economy. You know, so if you've achieved monetary stability, you need to look at fiscal discipline, and you can see that in terms of the debt, percentage of the deficit to the GDP is coming down. And, you know, why we do not have a debt problem in terms of default or any issues, then we need to be able to understand to ensure that our debt is put on a path of sustainability so that we do not exceed those lines. And we have to stay within the tenets of the Fiscal Responsibility Act. You know, that is also very important on the fiscal side. So it is now up to the economic managers to come up with the right policies that will stimulate growth and, you know, improve investments into Nigeria, because our FDI numbers are very low.
They're low.
Very, very low, less than $1 billion. So, you know, from a high of about 9-10 billion. So that is really what we need to do. The coordination of the monetary policy, fiscal policy, industrial policy, trade and investment policies. That's the next level.
But in your understanding with the last inflation figures we got from the NBS, do you think the CBN will start to loosen, talking about policy with the MPC and all of that, those figures? Because many say there's been a bit of, they think inflation is coming down one way or the other, and they think that maybe they should start to rethink their policy tightening, maybe look the other way.
Well, the challenge is that the National Bureau of Statistics has not even come up with the growth, GDP growth numbers.
Yes.
And they haven't come up with the rebased number, and we're already in July. So if at half year you don't know how the economy is growing and you're rebasing and you're bringing out those inflation numbers, those numbers are very suspect, because we do a basket of inflation numbers for the Lagos market, and our own numbers suggest that inflation has come down to about 27%. Okay, that's what we are getting, between 27 to 28%. Some of these indices are still a bit high, but we can see some sort of downward trajectory on inflation, which is a far cry from the numbers that the National Bureau of Statistics is giving us, which is more of a Nigeria-wide number. But like you said, the proof of the pudding would be if at the next MPC meeting, the MPC members have the confidence in those numbers to be able to begin to cut rates.
Just having confidence in those numbers.
Yeah, to begin to cut rates. Because you see, MBS now has an unemployment figures at 4% that nobody pays any attention to anymore. Because everybody knows that employment in Nigeria is not 4%. So that's a very, very ambiguous number, because you say if somebody has worked 1 hour in a week, then he's employed, which is not probably fair on most of the people. So we need to focus on growth strategies that will stimulate GDP growth. If we stimulate GDP growth 8 to 10% per annum, then the issue of poverty that the World Bank and the IMF are talking about will be resolved.
Let's shift to another very important topic, because having you in the studio here, I need to touch on this before you leave. It's President Trump. They talk about Trump. It's been Trump all the while. Even at BRICS, Trump's issue was raised. And now he's talking about a 10% tariff on BRICS partner countries. I'm concerned on how that might affect Nigeria. President Tinubu was at that meeting, and I'm concerned about my country. Really?
What is your concern? What do you...
How it affects us?
What do you export?
Exports,
what do you
imports?
export to America that is going to attract a 10% tariff? The Americans have already told you that your exports, which is probably oil and gas and probably urea, mainly from the Dangote refinery, is exempt from that. So that's the only thing we export to America, really. So how is that going to impact us? We haven't taken any advantage of the AGOA, the American Growth Opportunities Act, to be able to fill in some quotas there. And that AGOA might be out of the window by the end of the year because it's due for renewal this year. So, and the way Trump is talking, he's not talking about just slapping tariffs. South Africa has got 30%, despite the fact that Cyril Ramaphosa went on a diplomatic shuttle to the US. So America is looking for minerals. And that is what is driving that meeting you've seen with those heads of states. If you take a look at those heads of states that they called, they have strategic rare earth minerals in those countries that America is interested in. And that is why those countries were targeted. But at the end of the day, when you ask the question, which is what I said, with all the hula baloo, with all the hype and everything, I looked at the data from the US Treasury. And one of the things that the Trump presidency said was that they're trying to use these tariffs to be able to surpass federal income taxes. Now, federal income taxes last year was $2.4 trillion in America, okay? And the total for the tariffs last year, America, from their tariffs, they raised about $50 billion last year. So now, by July of this year, according to United States Treasury figure, America has raised about $50 billion in tariffs so far, which is double what they had done this time last year. So America is on course to be able to, by the end of the year, maybe do between 100 and 150 billion in tariffs. So all this noise that Trump is making about tariffs, at the end of the year, the income on tariffs to America would be probably between 100 to 150 billion dollars. And their federal income taxes will probably about 2.5, 2.6 trillion dollars. So is all this noise and all this disruption worth $100 billion? So when you look at the real deal in terms of the numbers, you know, Trump is just being Trump. So anything Trump says, you discount him and you focus on what you need to do and try to get the best, because at the end of the day, the numbers that Trump is talking about from the tariffs, half year, is not there. Yes, there has been 100% increase in tariffs collection from last year to this year, a $50 billion increase. But, you know, it's not at the levels that they had projected.
So it's not more that, it's not something that, you talked about AGOA before I go there. I'm also looking at the AFCFTA. AGOA is there, AFCFTA is for the African continent. I asked the question with an analyst one time, are you sure we're not also going to take, Nigeria's not going to take AFTA, just like we just missed out in the AGOA, the opportunities in AGOA, because AFTA is also running already.
Yes, you see, what the mistake a lot of African countries are making is that we have to start understanding how to negotiate as a bloc. The most successful countries that have done that are the ASEAN countries and the EU. The EU are so successful at it that they've also even gotten a single currency.
Yes.
Okay, and they're doing intra-European trade of close to $5 trillion, $6 trillion a year between them. Intra-Africa trade is less than $1 trillion because most of us are sending our things out of there. So it's time for us in Africa to sit back and let the African Union and institutions like the Afro-Exim Bank and the African Development Bank begin to drive some sort of negotiation for AFTA, so that Africa doesn't go and sit down, 5 heads of states go to America and try and negotiate a deal. No. AFTA should be used as a negotiating bloc for the whole African continent. So if we want to trade with America, let us put AFTA in front there and let us trade as a bloc. And then we have more leverage, you know. And if we are not doing that, then they begin to split us up and they begin to do deals with 5 heads of states will be brought to Washington because America wants all their minerals. You know, because America has lost its influence in the Sahel region. It's lost its military bases in Niger, Burkina Faso, Mali. So America is having to realign. And America is playing catch-up in Africa. 10 years ago, America was one of the biggest trading partners with Africa. then maybe only China was trading with only 20% of African countries. Now, today, China is the dominant trading partner for 100% of the African countries. African trading or African commercial activity has shifted east to China, away from the West. So that is the challenge of Donald Trump right now.
Interesting conversation as always. I must thank you for stopping by in the studio. Really appreciate this. Mr. Adetilewa Adebajo is the CEO of the CFG Advisory. Thank you so much and have a great weekend.
Thank you.
All right then. Well, still to come on the show, we'll